How the rich stay super rich. The buy, borrow, die strategy. When it comes to the richest of the rich, there is one thing that comes up time and time again when discussing their wealth. Can you think of what it is? We are fascinated by those that have managed to amass these absurd amounts of cash in their short lifetimes. And honestly, don't you sometimes wonder why you aren't as lucky as they are? To have the private jet, inhabit the luxurious mansion, and have access to almost unlimited amounts of funds all feels like fantasy we could never be a part of. Yet the thing that comes up again and again when discussing the rich and their wealth is the thing the rich seem to be experts at avoiding. Yes, it's taxes. But why should taxes matter? Well, in some places, the rich can be charged absurd amounts of tax, and this directly affects their influx of money. But there is one tried-and-true strategy the ultra-rich have passed down from generation to generation, almost like a family heirloom. This strategy has helped to transform regular families into a long line of heirs to fortunes. This strategy continues to be put into practice by the ultra-rich, and it's called the buy, borrow, die strategy. By the end of this video, you will understand how the rich use this strategy to their advantage to continue to grow their wealth. And maybe you might take away a tip or two when you are ready to build your fortune. But before we dive into it, remember that we make these videos for free for your entertainment. And all we ask in return is you click the like button and subscribe with the notification bell on. Step 3. Buy. Now the truth is that it is that simple to break down. Have you ever noticed it is said that only a few families control the majority of wealth in some countries? If you haven't, then that's great. But for the ones who have, you must wonder how it is that these families have amassed these unbelievable amounts of wealth and just seem to be getting richer over time even though they are doing seemingly almost nothing to grow their wealth. The key here is understanding the first part of the buy, borrow, die strategy. Truthfully, the rich follow these 3 steps in exactly this order, and by the end of it, the next generation is ready to inherit a fortune that has been affected very little by these pesky taxes. And by this point, with each generation, they continue to practice this until there is a domino effect that helps multiply the wealth of the rich. It was a USC professor named Ed McCaffrey who developed the buy, borrow, die concept to better illustrate to his students in just a few words how the rich systematically established a system that allows them to leverage assets to their advantage. The first step would be to buy. What this means is that the rich focus almost entirely on assets. An asset may be defined as any resource or good that results in a reduction of expenses, cash flow generation, or any future economic advantages a person or business can benefit from. An asset can bring some economic worth that directly helps to increase a person's or business's net worth. An asset is a broad term in finance, and many things can fall under this category, such as real estate, the stock market, or any other tangible or intangible good that appreciates is key for the rich when choosing an asset to begin their strategy. Appreciation of a good is important, since at the end of the day there is an inherently more value in something that increases over time, and once there is no cash flow or income from the appreciating asset, there is no income tax as the gains on this asset are unrealized. To give an example, real estate is sometimes used due to its advantages, such as the fact that it appreciates. The market is not known to be as volatile, and from the bank's perspective, this can be easily leveraged as collateral, which will be very important for the rich in later steps. Now, before you rush to get an asset, it's important to note that not all assets are equal in the buy, borrow, die strategy. The reason for this is that some assets are much better for collateral than others. Once you have an asset that appreciates, generates no cash flow, and you have not sold this asset, it's very important not to sell your asset. Then you will never be able to be taxed on this. Other examples of appreciating assets include art. In 2013, an abstract painting was sold in New York by artist Barnett Newman for the whopping price of $43.8 million at Framed Art Gallery Southeast. Now, on the surface, this might seem like a lot of money, and you might also wonder why anyone in their right mind would pay that much for one painting. And yet, based on everything we have covered thus far, it would be in the buyer's interest, as now he has a good that will inevitably, appreciate over time. What's more, this appreciating asset does not generate cash flow as gains are unrealized and, most importantly, cannot be taxed. Once the buyer does not sell, he now has access to an appreciating asset, something with inherent value that increases over time. But what's the real value for the buyer if he can't or does not want to sell this painting? How can he get access to any of the cash the painting is worth? That's where the bank comes in with our next step in the buy, borrow, die strategy. Step 2. Borrow. Now, here is where things get interesting. The rich have secured their assets and are ready for the next step, borrowing against the asset. Basically, if the rich were to sell that asset, they would be at a huge loss as a huge chunk of the sale would go towards taxes. They skip this profit loss by going to the bank to ask for a loan. The bank can then use their assets as collateral and the loan is not taxable. The rich get the cash from this loan, which would not be considered income. The proceeds from the loan can also go towards paying the loan. Now you can say you know what a securities-backed line of credit is. Essentially, you sign up paperwork for the maximum amount you can borrow at any point. Then you agree to use your investment assets, recall the real estate and art, for example, as collateral. Now, on the one hand, this type of loan also means it cannot be used to buy securities, but on the other, you can buy almost anything with this loan besides that. It is at this point that some of the rich might begin to see that private jet or luxurious mansion. Taking full advantage of leveraging their assets and working with a financial institution that will give them the cash they need. This is perhaps key in understanding how the wealthy operate. They have managed to come up with a very effective system that ensures they benefit from all the advantages of being rich and, by extension, having valuable assets, while at the same time putting aside the negative aspects of being wealthy, such as being confronted with very high taxes. Furthermore, this is all perfectly legal, and this is more than likely why it is a strategy that continues to live on through the decades and centuries. There is almost no downside to this incredible strategy. But could you see yourself doing something like this? What do you think of borrowing from the bank to fund a lavish lifestyle and using your assets to do so? Do you agree? Comment below if you would practice any of the steps mentioned thus far. Step 1. Die. So just to be clear, this is not a step we are recommending you rush into. This step is, however, the final part of the strategy, and it will better explain how and why this strategy is so effective and constantly in practice by the super rich. Now, think of an old rich man at the end of his life with his asset portfolio safely tucked away and ensuring he can live life as he wants without being taxed on his capital gains from his assets. When the old man passes away, his entire portfolio, and I mean all of it, all the land, the houses, the expensive art, the growth stocks, get passed on to his heirs tax-free. Yes, you heard right. This huge transfer of wealth from one generation to the next is not taxed. Once the rich have passed away and their assets get transferred to that of their children, the children can now return to the bank where the cycle starts anew. The loans continue to roll over at extremely low interest rates, which helps to fund the lifestyles of the children as they put into practice what the old rich man taught them. Additionally, there is another crucial factor at this stage where the transfer of wealth is happening, called the stepped-up basis rule. This means the new base price of the assets is set as what the value was when inherited. The children can now sell the shares, and in the eyes of the authorities, they did not make a profit and so will not be taxed on the sale. The capital gains tax is adjusted through the step-up cost basis. A capital gains tax is a lower-tier tax that is normally triggered when any security is sold and is usually determined by how much that security has increased in value before the sale. Thus, these are normally imposed on investments, or more specifically, profits made through the sale of assets. The original cost basis describes the value of the asset when it was originally purchased. When the children of the old rich man inherit his assets, the asset's cost basis is reset to its value at the time of inheritance, or when the transfer of assets was originally made. Thus, the children benefit as they only pay capital gains taxes on the original basis. But very often, once these assets are sold, this results in no capital gains taxes and essentially the passing on of assets that ultimately ends up being tax-free. And there you have it, the buy, borrow, die strategy broken down, and it is that simple. Instead of getting paid in cash, the super rich pay themselves by asset leveraging, which can then be converted to cash but in the form of a loan. It cannot be taxed as they technically did not earn anything. The cycle continues with their children, and the passing on of investment assets from one generation to the next is generally affected very little by any taxes. So ultimately, the buy, borrow, dies method helps the super rich to ensure they can hold on to their wealth for as long as possible and give their children the best advantage and protect their children's inheritance. It is a cornerstone for the millionaires and billionaires of the world. It is a way of life that has worked thus far for them, but you're probably wondering if it could also work for you. Who knows? If you liked this video about the super rich and one of their favorite strategies that seem to work wonders, be sure to leave a comment down below and check out our other interesting videos. If you learned at least one interesting thing from this video, don't forget to hit that like button and be sure to subscribe for more like this. See you in the next video.